Is there one company that really comes to your mind that really fits the bill in terms of a company that can really grow its earnings over time? Now, keep in mind, I do know that this is not financial advice, um, but I'm very curious to see your thinking in terms of what that company would be.
Yeah, I mean, there are a few companies that come to mind. Um,
Mhm.
One of the most obvious for me at the moment is probably Microsoft. Microsoft is a company that has reinvented itself a few times over in the last couple of decades. It started off as a company that was selling software in the form of operating systems sitting on personal computers back in the 90s. That was really their key business, as well as a little bit on the server side. So that was really the business. It had a virtual monopoly over that market, didn't have a lot of competition, and so it could control prices. It was putting out software regularly in terms of updates, which you would then go out and purchase. So that was sort of the starting point for Microsoft. Jumping ahead, um, the last sort of decade or so, they've latched on to a different form of business model in terms of the subscription model, whereby rather than buying the software outright and then in a few years' time upgrading and buying a new piece of software, you're basically paying uh, a smaller fee each and every year. Microsoft will then keep giving you updates over time, giving you more services as part of that subscription, which then creates a stronger, let's call it ecosystem for you to then try and leave would be really difficult. And so that's a big part of their business. It's not all they do. They now have a cloud computing business as well, which I think a lot of people are relatively familiar with, some less so. But basically, the idea behind cloud computing is that primarily businesses, rather than hosting software applications in servers that are located physically within their offices and place of business, rather than having that and having an internal IT team manage that server, all those servers and that software, they're basically Microsoft is providing an all-in service so that if you want to scale up the number of applications you're running, you can do that easily and cost effectively. You don't have to run your own IT team. Microsoft do that for you. Um, and what not only Microsoft is seeing, but also Amazon, which is actually the biggest player in cloud computing, and Alphabet or Google is seeing in cloud, is these are three of the largest companies on the planet. And within these cloud businesses, they're growing at anywhere from 30 to 50% year on year.
Crazy, eh? Huge, eh?
So they're in their view, and we share their view. Cloud computing has a long runway of growth ahead of it, simply
Mm.
because it's a way for businesses to manage their costs, manage their budgets, to reduce their capital investment. So Microsoft take care of all of that, and it just creates an IT solution that's more scalable and more cost effective for them, so that they can run their business um, more efficiently. And I think every business out there is looking for ways to do that. So rather than cut back on the services that Microsoft offer, businesses are actually looking to lean in and add to that. So those are really the
Interesting.
two core businesses for Microsoft, which have one or not many competitors, and they have pricing power as a result. And from their customers' point of view, the value that they're offering their customers far outweighs the cost to those customers, and that's why we think it's a great business model, because customers won't switch it off because there's no alternative. A and
It's
B,
way too
it makes
sticky.
sense. The return on investment for the customers is very, very good.
Interesting. So we've got the cloud business. I believe Microsoft Azure is only second to AWS. Number two, we've got Microsoft's software business, which is recurring revenue for it. We've got that massive tailwind in terms of organizations moving to the cloud. Correct if I'm wrong, moving a capital expense in terms of IT hardware, moving it and turning it into an operating expense, which therefore provides a bit more predictability. So, wow, yes, I agree, Mike. And I think from a consumer side of things, I don't think that's really much their focus nowadays. Correct if I'm wrong. It seems like to me they're very much playing in that large enterprise space where they have that pricing power. Correct if I'm wrong.
Yeah, that's right. It's definitely more of a business to business proposition these days. Not to diminish the businesses where they do face consumers. So Xbox would be one of those, so video gaming. And in fact, Microsoft are leaning into on that side as well, which I haven't talked about, but they're acquiring Activision Blizzard, which is one of the world's biggest producers of video game content. They've been around a long time. They have a lot of different franchises across different platforms. So mobile, people may be familiar with Candy Crush. So Candy Crush is one of their titles. So that's super big.
Oh, they bought out King, I believe. King Software, I believe.
Yeah, so Activision bought King. So Microsoft will soon own Candy Crush. They'll own Overwatch. They'll own World of Warcraft. They'll own Call of Duty, I think, is in there.
I think they got Minecraft from acquisition from before.
Yes, that's right. So I guess video game producers and content and franchises are immensely valuable in the sense that you have these hardware players and these ecosystems owned by the likes of Microsoft and Apple and others, whereby they're looking to think about how do we create a more sticky and value-adding service to our customers within the ecosystem. And one of the ways they can do that is by having, A-rated content. In this case, A-rated video game titles. So it makes a lot of sense. It's been a long time coming. In my view, it's been a relatively obvious opportunity for the likes of Microsoft, and we've owned Activision in our portfolios. So we're pretty happy that Activision shareholders will be getting a pretty good price for their shares, hopefully once it goes through.
Interesting. And I think the only thing that may potentially block that acquisition is, I believe, the US is equivalent of the ACCC, I believe.
Yeah, it's basically got to be approved by, I think it's 15 countries. So it's not just the US, it's actually got to be approved by 15 countries around the world. So Activision's trading at quite a big discount to the offer price. It's trading, I think, about in the low $70 range, which I think is about a nearly 20% discount to the bid price. So there's a chance, and markets are suggesting there's a pretty high chance that the deal doesn't go through.
And why is that? Sorry, because of the whole monopoly threat, or do you mean the pricing disparity?
Yes, because of the competition, anti-competitive potential blocking the deal. Interestingly, Warren Buffett, his company Berkshire Hathaway, have recently added to their position in Activision. So they think, in their view, it's a pretty good buy.
And why does this need approval? Sorry, from 15 different countries.
It's basically around competition. So whenever there's a big acquisition like this one, which will be the biggest acquisition that Microsoft have ever done, it's tens of billions of dollars. It's absolutely enormous. So it's really around the fact that if Microsoft get their hands on these video game titles, will they allow these titles to be accessed on non-Microsoft hardware? So, for example, can I go and play an Activision game on my Apple phone, can I go and play an Activision game on my Sony PlayStation, which is obviously not owned by Microsoft. So that's really where it's going to come through. But Microsoft has said they're not going to change anything when it comes to distribution. So I think regardless of if they're true to that word or not, I think it's still a good deal for Microsoft, because they could add things, or they could add value to their customers, which would create those more sticky relationships.
It reminds me of Amazon Prime, how I think the membership is about $119, I believe, US per year. And you give the customer so much value that they'll be stupid not to pay $119 per year. And we sort of, yeah.
Right. So that's really what it comes down to. So if you add up all the individual services you're getting from Microsoft, it far outweighs the annual subscription.
So is it the right time to buy Microsoft? Or I know you and I, we had a conversation about, where technology stocks are going right now. You yourself said you're focused on technology stocks. I think the NASDAQ is about down maybe 20%, I believe, year to date, roughly.
Yep.
Are we going to go lower? Or obviously you and I, we know that very much our conversation is very much predictions, but I am very curious to understand your thinking behind it. Do you see the market having that natural reflex of buying the dip because people see that there is now value and that the price sales multiple for a lot of companies in the industry have mean revert to sort of the 15-year average? Or do you see that with Jerome Powell thinking maybe we can't have a soft landing, we're going to see more rates, hence the NASDAQ's going to pile down a bit?
Yeah, I think it's still a time to tread carefully. I don't think it's a time to rush in. We're seeing extreme volatility day to day in the market. One day we'll see growth stocks up 5%. 24 hours later, they'll be down 5%. So there's a real lack of conviction out there. And I don't think you need to be a hero. There's a saying, you don't want to catch a falling knife. When prices are falling rapidly and in a really volatile and loose fashion, it's not a time to be bold. It's a time to hit singles rather than trying to hit fours. So really, we're focused on protecting capital first and foremost, investing in good companies like Microsoft, where if we close our eyes and the stock market shuts for a few years, we're happy.
You're right.
Because we know that they're going to continue to grow their earnings at 15 to 20% per annum. And so to answer your question, is now a good time to buy or not? We think it's always a good time to buy, because over the long term markets do rise. And the other thing to note is that every year markets decline at some point. A very simple strategy, and this is stepping out of the weeds of markets and volatility, a very simple strategy is to simply buy the market when it's down circa 12% intra-year. Because most years the market falls 12%, and most years the market finishes higher than it started. So that's a very simple strategy, which is a bit like dollar cost averaging, where you just put a little bit of money into the market over a period of time.
Got it.
And so you're not trying to pick the bottom, you're just trying to put money to work over time.
So very much, if you have a long-term view, technically speaking, you can catch the falling knife as long as you have a long-term view of that company.
You do. You have to have a long-term view. You have to have the stomach for the volatility. Because to think that you're going to buy in a volatile market and not see a loss, I think you're kidding yourself. A very simple statistic, if you look at the market on a very short-term basis, day to day, week to week, your chances of being right, as it were, that is the market going up, if you're a long investor, are not much different from 50%. But if you check the market on a yearly basis, your chances of being right are, I'm going to get the number wrong, but let's say 80%. So if you want to be right, don't check it daily. If you want to be right, check it yearly.
So that means we delete the trading apps on our phones. Is that correct?
Yes. The trading apps are designed to encourage you to trade. They're designed to make you greedy and fearful and overtrade and focus on what's not important, which is the short term.
Hey, and by all means, if you're a short-term trader, fantastic. A trading app will be fantastic. But if you're very much a long-term investor, you literally want to have those investments where you can close your eyes and not think about it for, 1 or 2 years, because it's that good.
Yeah, I mean, my personal view is if you want excitement, go to the casino. If you want excitement, I guess you can get it from the stock market too. It's very easy to do that. It's open nearly 24/5. You can trade markets all around the world.
Yeah.
If you trade cryptocurrency 24/7, who doesn't want to do that? Yeah, investing is about playing the long game, and it goes against human emotion to do that.
It does.
It takes a real strength,
discipline
to step back, and discipline to step back from it. And I think that's a big part of the role of financial advisors, is actually to do that, to make sure clients are doing the right thing at the right time. It's not just about having the best ideas, the best insights, the best trading strategy. It's also about having that coach to help you make the right decisions at the right time. And that applies to everyone.